Greetings Price Masters, and welcome to the next installment in the Price Master Pro video tutorial series. I would like to start this tutorial by genuinely thanking you for your interest in and support of Price Master Pro, and I hope you find this tutorial of benefit to you. In this video tutorial, I will cover the topic how to use Price Master Pro. In addition, I will share with you some tips and tricks of the tool. Before we start, it is important to understand the objectives of this tutorial. The first objective is to understand what Price Master Pro is, and what it is not. The second objective is to understand the theory behind it. Objective 3 is to understand the type of information presented by the tool, and lastly, Objective 4, to understand how to best utilize Price Master Pro. With these simple objectives in mind, let us begin. What is Price Master Pro? This is probably one of the most important questions, and a question that many new members don't fully understand. And therefore, I always like to begin my tutorial with this question, so that the rest of the tutorial is understood in the correct context. One of the best ways to tackle this question is to state what Price Master Pro is not. Why? Because by doing so, I am negating any preconceived notions, and then allowing the mind to accept the information that would affirm what Price Master Pro is. And so, Price Master Pro is not a trading system. It does not provide you with any execution signals. It does not provide you with any sort of buy or sell signals. Nor is it an automated trading robot, also known as expert advisors. What it is, however, is a trading tool. A proactive tool that forecasts future price reversal levels, and make them available to you right at trading day open, so that you are aware of roadblocks that await you in the day, and thereby planning your trade execution and setups much more efficiently. Now, let me briefly go over how Price Master Pro works. This will only be a brief summary. To get the full details, I recommend viewing another video tutorial available in the support section at the site, entitled Introduction to PMP. In short, Price Master Pro reviews a defined period in history, on a specific time frame, to determine price swings in the market. Then it will artificially build higher time frames from those swings. Then it will evaluate all swings for specific patterns. Once the patterns are determined, Price Master Pro applies 4 distinct Fibonacci price projection formulas to each pattern. These price projections are retracement, expansion, extension and alternate. Once the projections are formed, each projection is given a probability rank and then fed to a confluence engine that determines the best confluence or clustering area. Here is a 15-minute chart of the Euro-Dollar cross, on May the 9th through May the 11th 2012, that I will be using for the rest of the tutorial, and it shows an example of what the native Fibonacci price projections will look like, before being fed to the confluence engine. These levels represent the outcome of all possible Fibonacci projections for this particular time frame, and particular period. And as a side note, to produce the levels shown, just for these 2 days, would require hours to perform, if done manually. Price Master Pro does it in less than 2 seconds. I am sure you would agree with me that it would be nearly impossible to trade while the chart looks the way it does. Therefore, the confluence engine was added to only tell us which areas are most probable support and resistance levels. And voila! This is what the confluence engine produces, clean and crisp support and resistance levels that are much easier to read, understand, and apply. As you can see in this image, Price Master Pro has done a great job in identifying levels that price respected. One thing to remember, is that these levels are not drawn in retrospect. In other words, they were not drawn after market action. On the contrary, they were drawn before any of the market action took place. This is clearly shown in the far most right part of the image, where price action for the day has not completed yet, but yet the levels are already there. Now, I would like to get into the meat of this tutorial, and that is, by providing you with tips and tricks on how to best apply Price Master Pro into your own strategy. For this part of the tutorial I will cover 5 topics. 1. Support and resistance. 2. Fibonacci zones. 3. Previous day levels. 4. Line color change, and 5. Intra-projection differences. Here is the same slide as before, but in this one I marked the support levels in blue arrows, and the resistance levels in red arrows. What you will notice is that price will often find support or resistance at Price Master Pro levels. For the record, this chart is not cherry-picked at all. What you are currently seeing happens every day, and I invite you to test Price Master Pro yourself on your favorite instrument, if you have not done so already, and you will observe exactly the same behavior that is depicted here. Knowing that price will react to these levels in advance is a huge edge, because it enables you to react faster when a setup occurs. More on this subject later in this video tutorial. Let us now discuss Fibonacci zones. In this slide, I have enabled the Fibonacci zones feature. These zones represent the high limit and the low limit of a support or resistance area, where each Price Master Pro line is the center of that area. This area serves as a wider support and resistance level where price reaction is probable, prior to reaching the center confluence line. These zones serve in the same fashion as Price Master Pro lines would. Here is an earlier slide of the 15-minute euro-dollar on April the 13th, 2012, showing previous day's levels, in green color. The green levels are April the 12th lines. I like this particular example, because it shows how previous day's levels can be useful for current day. Careful examination of this particular chart shows us that the daily high and the daily low were at previous day Price Master Pro levels. Had these lines been not there, one would have projected a further drop to the next support level. However, due to the presence of that line, one can anticipate a possible reaction at the level, and thus, able to plan the trade accordingly. Now, let us talk about line color changes. In this slide, I have marked levels that changed color in yellow arrows, while levels that did not change color in green arrows. The question is, what does color change mean? And can it be used in trading? The answer to the first question is, when the color of the line changes, it means that the role of that line has changed. Meaning, if the level was support and was blue in color, then the line changes color to red. This means that the level is no longer acting as support, and is now acting as resistance. The question then becomes, how is this information beneficial? The answer is, this information helps you to gauge the true nature of the breakout. You will be able to determine whether the price excursion was truly a change in trend, or just a fake move to the opposite side. This information is most beneficial in keeping you on the correct side of the market, and out of bad trades. Let us cover intra-confluence now. This term means confluences among different time frames. This chart illustrates what I am referring to. On this chart, I have enabled the multi-time frame feature in Price Master Pro. You will notice that now there are more levels on the chart. And these levels encapsulate a lot more of the price action that is happening. The reason this is the case is because the chart brings confluence levels from other time frames onto a single chart. If you look closer, you will notice that this chart contains levels from the 1-hour time frame, the 4-hour time frame, and other time frames as well. By bringing all the levels onto a single chart, you have the added advantage of seeing all potential roadblocks from all the different time frames onto a single chart. This enables you to navigate the market in a more confident manner, and also eliminates the need to open multiple charts. This leads to more efficient and effective trading environment. Please note that the multi-time frame feature is only available in the MTF edition, or the Ultimate edition of Price Master Pro. A question I get asked often is, why do different time frames show different levels? I decided to tackle that question in this tutorial to help explain that phenomenon. If we are to consider how the market behaves in a fractal manner, we will quickly realize that different time frames will have different size swings, and thus the highs and the lows of smaller swings will exist inside larger swings. And as the time frame gets bigger, more and more of the smaller swings will be obscured by the larger candles, or bar size, and only bigger swings will show. So by default the Fibonacci projections will have different sizes, span, and strengths among the different time frames. Compound this phenomenon by the fact that Price Master Pro builds synthetic time frames from one time frame, thereby producing additional swings with the probability engine, and quickly you will come to the realization that it is natural for different time frames to have some differences in levels. Now, let us cover some of the best ways to use Price Master Pro. In general, there are 4 ways you can apply Price Master Pro in your trading. The first way is by incorporating Price Master Pro in your current strategy. The second way is by creating a standalone strategy around Price Master Pro. The third way is by using Price Master Pro to enhance your money management technique. And the final way is by mixing and matching all of the above. Let us talk about the first way, and that is by incorporating Price Master Pro in your current strategy. How does Price Master Pro help you in your current strategy? First, it will add evidence to market bias. It will help you view whether price is near support or resistance, and if so, which way the market is likely to go, and which way you should be trading into. This helps you in being on the correct side of the market, and thus potentially avoiding losing trades. The basic rule when starting out to use Price Master Pro is to never buy at resistance, and never sell at support. Of course, there are always exceptions, but if you limit your trades to the above rule alone, you will weed out a lot of potentially losing trades. Let me show you an example of what I mean. Let us for a moment examine a very simple strategy that uses a single indicator. I dubbed this strategy as the stochastic divergence strategy. Nothing fancy, I know, but I'm looking for simplicity and effectiveness here. So, the rules for this strategy are simple. You sell when second peak high on price swing matches with a lower peak high on stochastic, or also known as bearish divergence, and buy when second peak low in price swing matches a higher peak low on stochastic, or also known as bullish divergence. And this is a chart where I mark the potential trades I see. I have marked the first bearish divergence in red on both the price peak and the stochastic peak. Similarly, I have marked the bullish divergence in blue. In this chart, I have used stochastic with the settings of 13, 3, and 5. As we can see, in the 2 days we are examining, we identified 3 potential trades per day, based on the rules I have outlined. However, the real question is, would you have taken these trades in real time? Would you have trusted what the indicator is telling you? Would you have anticipated these trades based on the naked chart alone, especially the trades where the second divergence was several bars after the first peak? Let us now look at the same chart while Price Master Pro is applied, and look at the same setups. And here it is. Take a moment to look at this chart, and where divergences occurred, in relation to Price Master Pro levels. Do you see any significance in the location of the divergence, as compared to where the levels are? Would knowing the location of these levels before the divergence occurred, give you an edge in anticipating the divergence? Would the levels have given you significant support to the divergence setup? I believe so. Each and every divergence I identified had its second peak occur near a Price Master Pro level. Also, it is worth noting that these levels were created before any of the intraday price action took place. In other words, they were not created after the fact, to make the image look better. This type of performance is very typical, and you will observe the same on your own chart. Let us now discuss using Price Master Pro as a standalone strategy. In a standalone strategy, Price Master Pro is coupled with native price performance on the chart. Candle patterns, chart patterns, breakouts, pullback, and bounces are the ideal price performance setups to look for. Here is the same chart as before, with some candle patterns identified. The first pattern from the left is a morning star pattern. Please take note how the pattern occurred right off a Price Master Pro level. The next pattern is an evening star pattern. Same story there, the pattern occurred at a Price Master Pro resistance level, thus signifying a potential reversal. Both trades for the today would have produced 10 pips or more in profit. Let us now examine the next day. The day starts with a railroad track candle pattern in the Asian session. The pattern is followed by a bullish trend that ends with a bearish inside bar at resistance during the London session. This reversal is followed by a nice downtrend that ends with a morning star in the New York session, which I have not labeled. But then the level is retested again, and price pulls away, producing a railroad track pattern. This pattern produces a very nice uptrend to the next resistance level. Therefore, for the day, 3 potential trades were identified, each producing more than 10 pips each. Later in the tutorial, I will be discussing money management and how Price Master Pro plays a role in that. But for now, I want you to focus on how price candles and Price Master Pro work very good together to confirm price reversals. Let us now look at Price Master Pro and chart patterns. Using the same chart as before, I have marked the potential patterns. The first trade comes to us in the London session, producing a head and shoulder pattern. Having the second shoulder near Price Master Pro support, prompts us to wait for level break, to confirm entry. Several bars later, price breaks through support, allowing us an opportunity to go for a nice short trade, to the next Price Master Pro level. The next trade comes to us in the New York session, producing similar chart pattern. Similarly to the first trade, we wait for resistance to break before we go in. Price moves above resistance, however, the color of the line does not change, giving us a signal that this breakout may not be a true breakout, and so, we stay aside. Price indeed confirms the fake breakout, and reverses below resistance. In the following day, I identified 2 potential trades. The first involved a triangle, and the other involved a head and shoulder pattern. Close examination shows that the first pattern produced a profit of around 10 pips, while the other would have produced more than 10 pips. Naturally, trading is not about taking all setups that occur. Other factors, such as risk-to-reward ratio, general trend direction, and so forth, are also considered. Speaking of which, let us now discuss Price Master Pro's role in money management. In money management, there are three integral parts that need to be identified before any trade is taken. First, we need to determine our probable targets. This applies to both profit targets and stop loss. Second, we determine whether the targets offer us adequate reward-to-risk ratio, and if the outcome is favorable, we then determine the size of the position we will take. Here, I have used the stochastic strategy, but I have identified potential entries and their associated reward-to-risk ratio. The area shaded in red is the risk, while the area shaded in green is the reward. The goal is to estimate quickly whether the reward is at least 1.5 times the risk, and if it is, we execute the trade. In all, I have identified 6 trades, and their potential reward versus risk. Boxes begin at entry price, and end at the identified target. Targets in this case were Price Master Pro levels. A quick visual inspection shows us that all 6 trades had a reward ratio that is much greater than 1.5 times the risk. This is determined simply by comparing the size of the green box to the size of the red box. In this example, I have marked the price at which I would have executed the trade. Naturally, your entry may be different, and thus your box estimation, or reward-to-risk ratio, may be different, and you may have not taken some of these trades. That is okay. The important thing is the proper application of Price Master Pro to come to the correct conclusion for you. Now, let us discuss position size. There are many formulas that you can use to determine your position size. I will share with you my formula that I use on daily basis. The formula is very simple. First, I determine the risk I want to employ. Then, I determine how much that risk translates into dollars. Then I divide that value by the number of pips that the setup opportunity presents. This will give me the pip value I should be trading at for my risk dollars. I take the pip value and I divide it by the standard lock pip value to derive the position size I should be trading. Here is an example of what I described earlier. In this example, my account size is $1,000. My risk is 2% of my account. My stop loss is 20 pips. And the standard pip value on the account is $10. First, I translate the 2% risk by multiplying my account balance by the risk fraction, where 2% is 0.02. This gives $20 as my max dollars risk. I take the $20 and divide that by my 20 pip stop loss. This produces 1, meaning that my position should result in each pip value being worth $1. To derive the position size, I divide 1 by standard pip value of 10 to get 0.1 as my position size. If your account is a mini account, you simply use $1 instead of $10 for the pip value. Following this formula I have just shared with you, I have always managed to protect my account and survive to trade another day while maintaining a healthy compounding effect. Now that I have shared with you some tips and tricks of using Price Master Pro, let us put it all together. For this purpose, I will use one of the strategies that I use on regular basis, called no-name trading system. As the name implies, I didn't have a fancy name for the strategy, so I simply didn't give it a name. This strategy is a simple trend-following system that looks for moving average rebound setups. In particular, we look for 3 setups: fast retracement, slow retracement, and fresh crosses. The strategy uses Price Master Pro, trigger lines, zero lag MACD, and cycle indicator. I will not go into the details of the strategy, but I encourage you to review it at various online Forex forums, such as ForexTSD or FX Fisherman. For this strategy, I follow a stepwise process for taking a trade. The first step in the process is to determine market condition. In this step, I attempt to determine the various trends on different time frames. Is the market trending? Or is the market sideways? Once I determine the market condition, I then determine where price is in comparison to Price Master Pro levels. Is price above, below or at a level? Then I look for tradable setups, and I compare the setup to Price Master Pro levels. Does the setup give me good targets, with good reward to risk ratio or not? If the setup is of weak reward to risk ratio, I pass on it. If not, I move forward and determine the position size I want to risk, and then I take the trade. In this slide, I apply what I discussed in the previous slide. As you can see, I have 3 time frames open on the euro-dollar. At the top right corner I have the daily chart open. At the bottom right corner, the 4-hour chart, and at the left, the 1-hour chart. I use the daily chart to determine long-term trend, the 4-hour chart to determine intermediate trend and potential setups, and the 1-hour for entry, as well as potential setups. In this example, reviewing the daily chart, we can determine that price had bounced off support and ended the month with a flat trend. Trigger lines are coming close together, signifying weakness in the uptrend. We further determine that price is at resistance. This tells us that we should be looking for short entries only. Moving over to the 4-hour chart, we see that the week had opened with a gap down, letting us know that price will potentially try to close that gap, and that we should wait for that to occur, then jump on board the trend going short. Price retraced back to the trigger lines on the 4-hour chart, providing us with an opportunity to go short. Zero lag MACD and cycle indicator are pointing up, letting us know that there is a potential divergence setting up. The 4-hour chart setup isn't ideal, so it does not tell us much. When that happens, we move to the 1-hour chart and look for potential setups. In the 1-hour chart, we notice that price opens the day with breakout below support. The color of the support line changes from blue to red. Trigger lines, zero lag MACD, and cycle indicator curving downwards, telling us that a reversal is setting up. This can potentially be a fresh cross trade, except I prefer for the zero lag MACD and for the cycle indicator to align on the curve to make it more powerful. So, we will wait for confirmation and trade any pullbacks that occur. Several bars later, our patience pays off, with a nice pullback to the trigger lines. This gives us the setup we are looking for, which is slow retracement. Now we move to the next step of determining price targets, in order to determine reward to risk ratio. I have identified such ratio using the red and green boxes for easy visual reference. Both boxes start at the entry price, and end at the targets. The red box ends at the stop-loss limit, which is the nearest resistance level, and the green box ends at the nearest support level. By analyzing the size of the boxes, we can say with confidence that the reward is well worth the risk. Next, we determine our position size, and take the trade. In this particular case, assuming our account size is $10,000, our position size would be 1.4 lots. It is important to point out in this case, that once we take a trade, we constantly have to evaluate market condition, to determine whether the market had moved against our initial assessment, or we are experiencing a temporary retracement. At the time of taking this trade, price had retraced all the way back to our entry price. Nevertheless, since the conditions that made us enter the trades never changed, in other words, all indicators were still in support of a short trade, we maintained our position and never exited. This exercise paid off, and as a result, the trade was successful, and we booked 48 pips profit, while only risking 14 pips. This brings us to the end of our tutorial. I have covered a lot in this video, and I am sure you will have questions. I am happy to answer all your questions, and to do so, please feel free to send me an email at the address shown on the screen, and I will respond as soon as I can. At this point, I would like to thank you again for your interest and support in Price Master Pro, and I wish you many positive pips in your trading journey.